Hello everyone, how's it going? In this video, we're going to take a look at Lucid, trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq over the recent years. Many have said that it's going to be the next Tesla. Others believe that it's just going to be a bubble. Regardless, everyone would like to see the company doing well, at least from a market perspective, to profit from it. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies with an actual product rolled out. As time went on, the stock's price action, along with investors' hypes, went through some huge roller coasters, and some are still wondering if this is a bandwagon they want to be on. So in this video, we're going to take a look at Lucid to see if the company still deserves to have a spot in our portfolio. Before we begin today's video, I'd like to make a brief disclaimer. My videos cover my opinion on the current events and affairs and what's likely going to happen in the future. They're not investment advice, and I don't have a crystal ball, so I don't necessarily see what's going to happen in the future for certain. It's just my best guess. My videos are prepared either immediately before the uploading or a few days before. So some of them, by the time you watch any of my videos, they might no longer reflect the latest price actions. But nevertheless, they would still be relevant to analyze for subsequent price tendencies and trend analysis. Also, my videos aim to cover the securities as broadly as possible by covering the fundamentals and technical aspects. Other than the price action and the latest news events, we might also take a look at long-term tendencies, shareholder composition, fundamentals, and other market behaviors, as they all affect the decisions about whether we should buy a security, and if so, how many shares we want to buy. So without that being said, let's get into today's topic. Lucid went public in the height of the EV craze in late 2020 with a reverse merge with the SPAC CCIV. The market was very excited about this event back then because it would mark the beginning of a new era for many shareholders who want to purchase an EV stock at an early stage. Back then, Tesla was making one historical high after another, and it seemed that no one can stop this bullish tendency. People were in a mindset believing that the bull market is never going to end because it hasn't ended for the past 15 years or so. The only true alternative for Tesla at that time was NIO, and investors were looking for a domestic company with better oversight and perceived safety regarding their investment. Although Lucid was going public in 2020, it is a company with more than a decade of development as a private company and was able to prove to the industry that it is here to stay. We have to remember that the market mood was euphoric and that there seemed to be no obstacle for what lies ahead of us. The current price action acts both as a major cool down of the market and an opportunity for a more sustained development looking forward. The price of Lucid is having very little volatility in the last trade session of 2022, but overall confirming that the stock will likely be considered for its fundamentals in the future. Over the past 5 days, the stock went down by 2.4%, hovering between $6.20 and $6.80. Over the past 5 days, the stock has been down by 34%, and for which we don't currently have a support that has been tested more than once, since the lowest point has been reached on December 27th, and there has been a very modest recovery since then. Overall, I believe that Lucid will probably continue on the current trajectory in the short term due to fundamental reasons. Now, if we look at the long-term tendencies of Lucid, it's not hard to see that the bubble has now bursted. The market no longer wants to blindly just follow the latest hype. And on one hand, it doesn't want to persist on believing that the bull market is going to be there as long as we believe that it's going to be there. That PowerPoint presentation is going to matter more than actual profits. And on the other hand, it simply cannot afford to ignore the obvious issues with supply chains, doubts on flagship companies, about a sector, high interest rates, uncertainty in economic outlooks, and so on. So The market has long predicted that there will be somewhat of a bearish market after such a prolonged bull market, and that most shareholders believe that it's going to be a rough patch for at least a couple of years. So the market has peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that has an investment value in the years to come. The main question in everyone's mind is when they should enter in the stock. Well, of course, I say that, but if you don't believe that EVs are going to be relevant 10 years from now, then of course it doesn't have investment value. So the long grind to lower price levels is likely caused by the market trends rather than fundamentals. So things are not as alarming as they may seem. But on the other hand, we got to remember that these kinds of slides, they can go on for a very long time, bringing the title to very low prices. So this is why we got to smooth out our buying patterns. When we take a look at Lucid's financials, we can see that the company's profitability remains to be improved. It is an encouraging sign that revenue has been increasing significantly from $97 million in Q2 of 2022 to $195 million in Q3 of 2022. On the other hand, cost of goods sold increased as well, from $292 million in Q2 to almost $500 million in Q3 of 2022. It's interesting to note that the cost of goods sold seems to have increased slowly, like compared to the revenue, which shows that Lucid has been trying to control its expenses, and sometimes it actually succeeds doing so. Nevertheless, there are improvements to be made in that area. Another element to observe is the operating expense. I think that those correspond to the fixed costs, and over the quarters they haven't really fluctuated significantly, which is a good sign as well. Nevertheless, the company stands to lose approximately $700 million in Q3 alone from those operations, which will add up if we annualize the cash outflows. Speaking of cash, the cash reserves of Lucid is impressive from the outside, but if we think about it, given that it has an operation running on deficit, the fact that it has between $4 to $6 billion really isn't as impressive as it looks, right? Because this can be gone very quickly. So we cannot rule out additional rounds of dilutions over the next month and even years. In terms of liabilities, the debt that Lucid took on over the past quarters gradually increased in size from below $2 billion to above $4 billion in Q3 of 2022. So simply put, the liabilities provide financing to companies that keep the operations going. They may provide critical cash inflows when the company needs funds to operate due to cash inflow and other reasons. They differ from equity sales in that there is no loss of ownership, but there will be additional obligations to fulfill. If the company fails to comply, they would be considered as insolvent, and in that case, the company could be liquidated. So, some additional relevant aspects would concern the current ratio and the inventory turnover of Lucid. The current ratio defines the liquidity of Lucid's assets and how well they can meet the short-term difficulties. This number has been going down over time, which suggests that Lucid will be short for cash or equivalent in subsequent periods, so we can't rule out the additional rounds of share dilutions. The inventory turnover is a measure of how quickly they can sell their vehicles. The recent statistics show that Lucid has no difficulty selling its vehicles, which is a testament of Lucid's brand recognition and reputation, and also the pertinence of their strategy to position themselves in the high-end sector. Overall, Lucid's financial figures paint a picture of the company that is growing, but also lacks a bit of discipline and needs to scale up its production in the year to come. Now, nevertheless, I think that the overall picture is still positive in the sense that it's still growing, but we need to see how things are going to pan out in 2023 as well. So let's also take a look at the shareholder composition. Right now, Lucid is owned by almost like 72% by institutional shareholders. So the reason why this might be the case is that institutional shareholders might have more diversified portfolios, and many of them have decided to pick Lucid because this seems to be one of the better companies in the sector. They also tend to stay longer in a stock because they have, sufficiently diversified holdings that one position is not going to tip over the entire balance. And with that being said, I think that what we can say about Lucid is that if we invest our money now, it does offer some additional layers of reliability and legitimacy given the institutional participation. So regarding the short selling pressure, Lucid has a sizable short position, around 5.2 million shares currently been shorted, which corresponds to around 22% of the total volume. The volume of short positions can help us understand what some market participants think of Lucid, and if there is a concerted shorting operation from institutional owners. In this case, I believe that the short sellers are anticipating the stock going lower due to market trends. There are some real potentials for a short squeeze, but the overall volume of short positions suggests that there is a substantial size of people who believe that things will go worse before they get any better. Not necessarily a concerted operation per se. If the market trends turn, I believe that much of those short positions will then redeem, forming a second wave of additional demand, pushing the stock even higher. So overall, I believe that Lucid shares would deserve to be bought if you believe that it's going to be relevant in the future, if you think that the EV sector at large will be, relevant in the future. So personally, I believe that Lucid deserves to be considered for its brand power and also the level of advancement in its operations. With that being said, I believe that Lucid should be treated as a long-term investment with a purchase pattern that aims to remove the short and medium-term volatilities. For this reason, I believe that a strategy of dollar cost averaging is the best way to go, with a maximum exposure between 3 to 5% of your portfolio spread over 6 to 9 months.